I put in work every day and I pray. Today, I'm on the seven day, I'm put in work every day and I pray. Today, be around, I'm in the seven day,
Memories in mine, I got pain in my soul. They told it, yeah, man, just the price, me the pain. Talk it out, I pick myself and go again. No, that's more journey on my way to heaven. Switching lanes with a Lambo, bitch, I'm a slaver. I put in work every day and I pray. Say, let me a while, mommy, baby. Having me a while, mommy, Kobe. I put in work every day and I pray. Say, let me a while, mommy, baby. Having me a while, mommy, Kobe. I put in work every day and I pray. Say, let me a while, mommy, baby. Having me a while, mommy, Kobe. I put in work every day and I pray. Say, let me a while, mommy, baby. Having me a while, mommy, Kobe. I put in work every day and I pray. Say, let me a while, mommy, baby. Having me a while, mommy, Kobe. I put in work every day and I pray. Say, let me a while, mommy, baby.
So, when they 9, 8 September 2024. Okay. So, yeah, me Sunday prep. I'm the share marketing. Yesterday, and no, the Saturday, we review. I reflected on how I performed over the weekend, my predictions, my analysis, how it reacted to price, how how price responded to my analysis, and how I responded to my signals from my analysis. So I reflected on those things, and today my aim is to use the analysis that I had yesterday about my reflection to project into the future this week and the coming weeks, where we are likely to go. Are we moving in an impulsive phase, or we are in the corrective position? I will look at all those things so that I can see where price potentially will go. So let's begin. This is USD, Australian dollar, United States dollar. Okay, so I did this setup yesterday, and when you win, I'm yes, how do you win? And me model no the overall BBR near a friend of PSE model. There is the structure, and as I say, the foundation behind my everything. So the PSE model, this is the model. Once I say I want without the concept, you won't understand whatever I'm doing here. You don't alliance no, you can even say oh, price do I say near your bar formula price do anything on the atoa. It makes sense. It is literal, but behind what is behind the strategy, is the PSE model. There is a concept behind whatever line you will see on this chart. There is a reason, a deep reason behind whatever line you see on this chart. It is simple. It is simplistic, but it is complex. There is a saying that simplicity is the ultimate complexity is simplicity, or something like that. So it is simple, but it is not easy. There is a model behind, and the model that I use is the PSE model. The PSE model. So the P. So the P is positioning. The S is sequence, and the E is entry. So this P is the positioning, S is the sequence, E is the entry. What is the positioning? Positioning sequence I think the entry there, it makes sense. Yeah, how to get in the position. You have to get involved in position, and Kasa is the entry. So what is the positioning? And why is it? Because look at it from this side. You have to pass from this face. You have to take here first. You have to take your positioning first before you go for your sequence. And the positioning and the sequence will affect the entry. So you check your positioning first, you add your sequence, and then it will affect your entry. What is the positioning, and why is it the first pillar or the first foundation of the strategy? Why is it adding any sequence entry position, and I say sequence positioning entry, or entry maybe within can tap it before you can do whatever you want to do? Why is it not any other way but this? If that's the question, I will be sir, you will now answer me as you are going on. So with every strategy behind whatever we are doing in the market, our aim is to make money. Technical analysis, indicators, market makers, SMC, ICT, whatever, chart we are patterns, whatever we are. Your aim is to make money. You are not just there to draw lines on the chart for fun or whatever. You need money. You don't need money, but you are there to make money. That's why you are making all of those things, or you are spending time to learn a strategy. So how do we make money in trading or in portfolio asset management? How do we make money? How? We make money by selling the highs and buying the lows. It is simple as that. You buy the lows and you sell the highs. It is simple as that. That's how we make money. If you buy the highs, you will lose money. If you sell the lows, you will lose money. Why? Okay. The reason we sell the highs to make money and we buy the lows to make money is because when, let's see, at this level, price every day na price a drop to the downside. We know is a movement of money flow, a movement of money in a apprentice behaviors way. And money flow and you be retail traders like individual traders. This money flow is moved by huge amount of money into banks, central banks in any we then they move this kind of monies. Our edge in it is not to control the movement. You can't. Oh yeah, then you need to control the movement of the price. What do you necessarily observe? So if price there was no one to push it above this level in a drop in a price above, there's a likelihood say nipa now, and I say the people that defended this level when price got here, they are likely to step in again at this level to push price to the downside to defend the level. So when you are selling here, you are in to make money. When you are looking for sales, you are in to make money because you are backed by the money flow in the market. Same thing applies at this low here. So when price comes to this low and you are buying, you know that when price go here, there was no one to bid price below or offer price below this level. So when you are buying here, you are in to make money to the upside here. So we buy the lows and we sell the highs to make money in trading. So how do we know where the market is likely to move? How do we know say okay, this area everything about the price is about to move? Because as price is coming here, everything about the position your home has it, and as everything your position your home has it. I didn't know your position your home has it, and now I see new position your home. Why not even say young position your home and price it was a top was it, and I say top was it, and I say I see. My position your home I see. This is me talking about the first foundation, which is the positioning. So please follow me here. So positioning, we are our edge is not in our ability to control price action, because we can't control price action. Our edge is in observing the repeatable price behaviors and seeing where the bigger players are likely to step in the market, so that we can position ourselves at those areas, and when the move is happening, we will get in and we will scale in. Scaling as price is giving us positioning to move to the downside or to move to the upside, wherever the move is going. So it is any better position you might say you must say price or you position, and as price is growing, you will scaling, then you will get opportunities, then you get entry. So positioning and this corrections is the sequence and this will affect the entries. So another sequence entry, you will get a bigger correction, you will get entry to the outside. So the sequence will affect the entry, the position will affect the entry, but we look at the position first, where the bigger players are likely to step in the market, and we check the corrections within it for entry. So this is the overall Professor TV, we are summary. Yeah, this is just the beginning. And this is the summary of you understanding the PSE model. The PSE model, the positioning, the sequence, the entry. Okay, so let me look. We are going in on the positioning first. We are going in on the positioning first. But the kind say positioning, price movement. Okay. Let me. So under positioning. So under positioning, what we have is value area and volume. What is value area and what is volume? What is value area and what is volume? And what let me come see. What is value? Before we come to the value area, what is value and what is volume? What is value and what is volume? Value, they are value at, they are volume at value areas. They are volume at value areas. And what are volumes? Volumes are the lifeblood in the market. Volumes are the lifeblood in the market. Volumes are the lifeblood in the market. So before I even move from point E to point B, we need volume. Before we price move from point A, if here is point A to point B, we need volume. We need this. We need volume, and they are value at volume. They are value at areas where they are volume. Okay, how do we get volume in the market, or how do we see say area has a volume and I say volume? Like we can say, how do we see say area has there was volume here? Because that's the areas we want to position ourselves at. That's the areas where we want to position ourselves, because that's areas where the bigger players are likely going to step in the market. So the bigger players step in the market at area where there is volume. And there are value at areas where there is volume. So we want to position ourselves at value areas where there is volume. and we need volume to move from point A to point B. The bigger players need volume to move from point A to point B. That's why we want to position ourselves at areas where there's value and areas where there's volume. There are two ways in which price will generate volume or will generate volume in the market. The first way now we will generate volume is we will trigger value. We will trigger volume. So this is volume triggered. It is very sharp. This sharp move you see in the market is volume being triggered. Volume being triggered. And this is a volume being built. So you move strong impulse and you build volume to generate liquidity to continue the move to the downside. Here, price trigger volume. So volume was triggered here. Strong impulse. And what did you see? Volume was built into this volume to generate liquidity so that you can move price to the upside. And this is model 3, by the way. If you haven't gone through the models, the first model, the second model, the third and fourth, the continuation, the reversal model, you have to go over those things so that you can understand the positioning. That those impulse and correction phases, how they are positioned on the market, is part of the positioning. You can imagine I said how they are positioned in the market is part of positioning. So think of that. So what we have here is volume being triggered. We triggered volume strong to the downside, and we built volume with these corrections, and we push price to the upside. So this volume that we built was able to push price to the upside to tap into these areas. So there are two ways in which we will generate volume in the market. First one is by triggering volume, and the second one is by building volume. And the volume being triggered are the sharper moves in the market. The volume being built are the corrections in the market. So this volume being built, you trigger volume impulse, you build volume to continue to the move to the outside. So here we trigger volume, we came back to tap into the structure again, trigger the volume to the downside. Volume was built near the reversal price. We tapped into the structure again, we dropped. So I have to to know where there is value and where there is no value. So areas where volume has been triggered or built, they are value areas. Let me show you. This area we can see we have a correction here. So impulse, correction, continuation. Volume being triggered, volume being built, volume being triggered. What did you see? Price above, you never tap into the structure and break here above, near trigger volume. So one thing about volume and value is price is always seeking volume liquidity. Price is always seeking volume liquidity. And whenever we don't commit to the full move, it means price is seeking better area of value. It means price is seeking better area of value. So you have impulse, correction, continuation. Now the trigger and we care about. So wherever I like the volume, most of the times price will come back to trigger the volume. That's there. That's why we position your own. And anything that I say, the trigger volume, the position your own. Send a bear price a tap in. We will look for price to push back into the market. Correction. Then continue movement to the downside to at least in low has it. Because price moving from value area to value area from point A to point B. I hope that then what I'm doing is getting clear with you, because I really want to help me. I really want to help myself, and I really want to help you too. So this is first one. This is the positioning. The entire media to was saying and missing. I didn't can't, but I will repeat it again, because I believe say the mind learns through repetition. So media to because volume was triggered here, and there's value at areas where there's volume. So I mean, the see afterwards as my area of interest. Here is a value area because volume was triggered here. The price ever has here. I'm looking for a say price. Either price will build volume into this level, or will push into this level strongly and will trigger volume, which will push price back into the market. We will correct and I will continue the move to the downside. So you have for positioning, it is our value area and volume. For positioning, our value area and volume, and understanding the phases of the market, the impulse correction phases of the market. Okay. So now let's you the part by part. Let's look at the sequence. See, let me go further into the position. Can baby say price is always moving from point to point, and once you are doing that, we need volume. So it is either we trigger volume or we build volume, and they link up with the phases. We have four models in which the market trades in. We have two continuation models, and we have two reversal models. So these two are reversal models, these two are continuation models. We have impulsive phase, corrective phase, and the impulsive phase. Here we have impulsive phase, we have our corrective phase, and our impulsive phase. They are the same impulsive corrective phases. They are the same impulsive corrective phases, but they are positioned differently on the chart, and that gives them different meaning. So let's say you have a strong impulse to the downside. An impulsive move will link up with the volume being triggered. Because this is the volume being triggered, they are very sharp move in the market. They are the impulsive phases. And the volume being built are the corrective phases. So whenever I say yeah, a strong impulse to the downside, and we started correcting to the downside again, we are looking for a say price will push to the upside because the trigger volume in the air building volume, it is unlikely, although we be able to miss your marketing. Anything is possible in the market. Price able to continue this move for us corrected to the downside. It is possible. It is possible. Anything is possible in the market. So that one they I don't know. But we have this as a reliable pattern say price that's a corrected to the downside that most of the times it is a higher probability. It is higher probability say price will push it up to the upside or price will reverse it. So you bring down with impulsive freeze and you get your correction leading to or correction in the same direction as the impulse are. You'll be looking for it to reverse. So impulse, correction, reversal. But so when you're impulsive freeze, that's a correction is going against the impulsive freeze. You'll be looking for it to continue the move. So impulse, correction, continuation. Let me show you how that thing looks like on the chart. So if you're in impulse, this is the third model or the reversal model. In correction. Impulse volume being triggered from and tapping into science volume being triggered here. Correction, reversal. Impulse, correction, reversal. Volume being triggered, volume being built. Reversal. This is the move we are looking forward to trade. This is the move we are looking forward to trade. With the idea that we have volume being triggered, we are correcting. Tap into this area. We are good to go. And you go the value of the areas on the chart are not the same. The location of price also determines the value that I hold on each key level or on each value area. So let's see, when I am positioned at this area, it is less risky. It is less risky. I can't say LR. Less risky, higher probable. Say a high probable setup because you are positioned at the highs. We are the origin of the structure. After we tap into this area, we are the origin of this move. So we position me home. That's the price ever tap in. That's the miscellaneous. Although price can move, but it is higher risk. HR, human resources. It is higher risk because we are not positioned at the origin. We are not at the beginning of the move. So if say we are the original structure, remember I say I see no one is say the movie impulse, correction, continuation, volume being triggered from side and top quasi in a way volume being built. I'm looking for a say the will continue moving into a lower structure has it. It is simple as that. Okay, so excuse me, I'm going for a break. Give me like 3 minutes. I'll be back. Let me play music. Hey baby, mommy, you. Hey baby, mommy, I put in work.
Mami afuge nyami asiano ni gripa Isioni saka manupa kuwa tamdueo Enya bayifuane bonsana netea Akron kwa no real leaders Betuni pa wosie batika mabejubi Semi wanyada fama kwa kukona kwa febi Ukondo wendo bodi egu wambesie kubobi Mami siraye diye ibi na wachi NDB What's it sell? Every day die unsoro When mama die, baby cry, where them go On June 10th, I said to see how people go Memories in mine, I got pain in my soul They told it, yeah, one just the fight, he's the pain Talk it out, I pick myself and go again No, that's more daddy, on my way to heaven Switching lanes with a Lambo, bitch, I'm a 7 I put in work every day and I pray Say, baby, oh, why, mommy, baby Having me, oh, why, mommy, Kobe I put in work every day and I pray Say, baby, oh, why, mommy, baby Having me, oh, why, mommy, Kobe I put in work every day and I pray Say, baby, oh, why, mommy, baby Having me, oh, why, mommy, Kobe I put in work every day and I pray. Say, baby, oh, why, mommy, baby. Having me, oh, why, mommy, Kobe. I put in work every day and I pray. Say, baby, oh, why, mommy, baby. Having me, oh, why, mommy, Kobe. I put in work every day and I pray. Say, baby, oh, why, mommy, baby. Mami afuge nyami asiano ni gripa Isioni saka manupa kuwa tamdueo Enya bayifuane bonsana netea Akron kwa no real leader Betuni pa wosie batika mametubi Semi wanyada fama kwa kukona kwa febi Ukondo wendo bodi egu wambesie kubobi Mami siraye diye ibi na wachi NDB What's it sell? Every day die unsoro When mama die, baby cry, where them go On June 10th, I said to see how people go Memories in mine, I got pain in my soul They told it, yeah, one just the fight, he's the pain Talk it out, I pick myself and go again No, that's more daddy, on my way to heaven Switching lanes with a Lambo, bitch, I'm a 7 I put in work every day and I pray Say, baby, oh, why, mommy, baby Having me, oh, why, mommy, Kobe I put in work every day and I pray Say, baby, oh, why, mommy, baby Having me, oh, why, mommy, Kobe I put in work every day and I pray Say, baby, oh, why, mommy, baby Having me, oh, why, mommy, Kobe I put in work every day and I pray Say, baby, oh, why, mommy, baby Having me, oh, why, mommy, Kobe I put in work every day and I pray Say, baby, oh, why, mommy, baby Having me, oh, why, mommy, Kobe I put in work every day and I pray Say, baby, oh, why, mommy, baby, oh Having me, oh, why, mommy, Kobe
Okay, so if some to us were when I was talking about say the value I'm placing on each area is different, each area of interest is different, and you have to before I make comment to us, the say will be out here say about how this models. This impulse correction continuation model, the continuation, the reversal models, how they relate to the volume being triggered and volume being built. It is crucial you understand this. It is crucial I understand this. It is crucial that everybody understand this, because it is very crucial from my experience. Okay, so you have to get it in your dream. Say we have 4 models. We have corrective, we get correction, a reversal model, we have continuation model. So you can say area C volume was triggered here, price about tapping. Volume was built here. And sadly also we take notes, because you only volume being built, and the price will come back to tap into this structure and then will drop. And then we drop, we tap into this move and we rest. We left a gap. Impulse correction continuation to tap into this structure. Which are going to okay and so tapping into this structure. And you push it up and you call never tap it back into this one and drop it. So as you can see, say every moment we are price every equity high, never dropping, every tapping. I see price equity some small high when they dropping. Everybody will be keen and dropping. Again, I see price dropping, everybody never tapping and dropping. Price so this repeatable, and again we have seen the same thing here. Impulse correction continuation. So volume was built near the trigger volume was there. So here is a value area where I will be positioning myself. I will be positioning myself. I'm looking for myself. The bigger players will step in to move price to at least and downside here to fill this order, or continue this move all the way to the downside. For now, what I'm looking for is impulse correction continuation. This volume that was built here, this momentum or liquidity that's here, price will eventually come to grab that liquidity. What did we see? Price came to break above 1, 2, 3 daily wicks and we dropped. So now when we talk about the positioning and the sequence, follow me closely here, because now I'm doing the real thing with the current price action. Look at how, or observe how I am using the models, the PSE models. Observe. So now I can see there's value here, because volume was built where we sold off. This volume that was triggered here was from this correction or volume being built. Then our price about the break here around in your drop. Here is a value area. So I'll put this thing on as my AOI, area of interest. I'm interested in this area. I have interest in this area because what? Because I think, it's not I think, because at value areas like that, there's a half bubble that the bigger players will step in the market. So I position myself at these areas so that I don't put myself at position where I'm at a disadvantage. So that's the positioning right here. Why I'm positioning myself at this area where I'm looking for a sell price ever reverse to RCRC is because of in volume now building into this area. Now price ever be breaking below. Please follow me closely. This one the cube, but this was the middle structure, impulse correction continuation, which signifies the completion of a pattern. Impulse correction continuation and the drop in. So this one this part. But we will get in. I'm alluding this to you earlier so that you do wanna teach you more. You will have some kind of idea about what I'm doing. So you can see from the mega time frame perspective, say volume was built here. Na price every take is out and there on near trigger volume. We trigger volume to the downside here. The video has seen again volume was built here. Na price there the reverse. We left a gap to the top. And to take it out, but still price a drop. And in terms, thinking it in terms of risk, is it higher in risk or is it lower in risk? Thinking it in terms of risk. If say you tap in at this top here, that's a drop here. That one is lower in risk because we say LR. Lower in risk, lower in risk because say I see volume was triggered here. And if say we leave a gap, there's a high probability say price will come back to break the structure and break back in before we continue to move to the downside. So if say Yentimian breaks are high, that's a drop here, it carries more risk. That one is higher in risk. We know. Now I am tapping, this one is higher in risk. But you're tapping into the top here, this one in risk. So this one here, a current price action. Is it higher in risk or is it lower in risk? Because whatever I'm doing, my PSE model, it is supposed to answer 3 questions. My first question is it a high probable if say you may take a position now? This PSE model must help me answer the question. Is it higher probable HP setup metric? Is it higher probable or lower probable? High quality setup or low quality setup? I have to know from my PSE model, from this my model, variables that I consider to be a high probable setup. Confluences that comes together. When they come together, I will consider them to be higher probable. And confluence I may know is okay. This setup is lower probable. So I have to answer this question. Is it higher probable or lower probable? Is it higher quality or low quality? The second question is Is it higher in risk? Almost a dada. Is it higher in risk or lower in risk? So HR. Is it higher in risk or is it lower in risk? This PSE model is supposed to help me answer this question. Answer this higher or lower risk question. I was saying positions and I'm saying areas. I'm say okay. If I am positioned in these areas, this area carry higher risk, but I'm at this area, it carries lower risk. To say me and say me can be to say area beyond the value I place on it. So there are areas me place less value on it, and there are areas I place high value. Say most okay, this area it is a high probable say the bigger players will step in the areas you will just have correction, price will correct near movie up. So those are inflection points. Price can reject at those areas, but most of the times you will just have corrections. Price will correct at those areas, and then price will continue the move. So when we are at inflection points, it is higher risk. The setup might be a high probable setup. It might carry all the variables that gives us a high probable setup, but due to the positioning, it will be a higher risk. It will affect the entry. It will affect the overall risk of the structure. It will affect the risk. Now, either I'll put 1% or 2% or whatever. The risk will be built from these technicals here. So I can mitigate the risk and lower the risk on setups due to or based off of my PSE model. So the third question is, if I'm taking a setup, does that setup fits my plan? So that one is technicals, but it is about your plan. What is the plan? And the plan, you get to that side later, but I have to have a plan in place before I can say okay, this setup I'm taking, either it is high probable or it is some setups can be a high probable and it can be lower risk, but not a fit plan. It hasn't matured and you go on man and yet and the fit plan, you don't have to take it. So these setups, this is the question that I use. This is the question that I see to answer with the PSE model. This is the technicals. The technicals should answer these two questions. This with the plan, and I have to have the mental framework to execute. So the positioning, the sequence, the entry. Higher in risk, higher probable fit plan. If so to me understand it, now integrate your day into your mindset. There's going to be a whole lot of changes. So I see you are building volume into the structure and you are dropping strongly to the downside here. The downside here. I can't even do like this. Then it's okay, I will tap into the structure. But for simplicity's sake, in the vector, in my position, in the breaky. How did we approach the level? There were K through near breaky below. This here, and this move is playing out. Now the position is good because my position at area where there's volume. So there is value at that area. It is on the daily. The time frame also does matter, but the daily carries more weight than the 4 hour or 1 hour. So if I see areas like this on the daily, it carries more weight than areas like this on the 4 hour. So when this happens, the second thing that I check is the sequence. Now the move is playing out. The second thing that I check is the sequence. What is the sequence? The sequence is the corrections. How they move is unfolding as the bigger players are stepping in. How is the move unfolding? That's the sequence for me. The corrections within, the entries. So this structure, this one like this. I think it's Friday, no. BBC, which is a reversal model. So impulse correction into this value area on the daily. So in my position in one I knew say here is a value area. Na pricing, so it pushes strong impulse correction. The bar for our number will say a forming a reversal structure in a drop page strong input into the market. One thing I ever so I can't want to say is something that is very vital, which is which is signal price action and confirmation price action. Until the American one send you is signal price action and confirmation price action. And this is part of positioning. This signal price action and confirmation price action is part of positioning. It helps me to stay out of unconfirmed trades. So let's see higher up in the run. This setup. Let's answer the questions. I'm positioned on the daily. I'm positioned at a value area. So this one, let me use tick. I'm positioned at a value area. So I have positioning tick. First, this one. Price has come to break above my structure. Tick. Which is another pattern. Price breaking the structure and breaking back in. How did price approach my level? The approaching impulse correction, which I'm looking for, is a better reversal. So price approach the structure in a reversal model. Tick. So this one speaks for me, say there will be a reversal move to the downside, and it links with the idea say at a value area, me looking for a price ever breaking, near breaking back in near drop. So value area correction model, reversal model, and breaking above and breaking back in. Breaking above and breaking back in is the signal and the confirmation price action. Sometimes price everything do I see, you must say a correct like this. And there are three ways in which price ever approaches a level. Price can approach a level in positive structure like this. Near break it back in and correct it. And then we continue the move to the downside. This thing is a bit me a see. Another thing they meet me also about is say price ever for me reversal model KCA. We approach it and we drop. And as the price, they will squeeze it into the structure. They will form some form of squeeze. Today I woke up and feel like doing nothing. But when all said and done, they will call you nothing. So three ways in between approach. We see price approaching impulsively. We see price approaching correctively. Until then, I'm trying to say, here is the signal when price is at the area. Is the signal price action. So this one is the signal price action. When price is at the area. So when price at this area, I'm not looking for it MSLA because price approaches have structure we correctively. So who the motive who follow me first or the only way able to make money is MSLA what I see because me being say price every day it pushy about form or the somebody is coming to step in the market. No one no push price to the downside. So the person who say me say price it will push it back into the market strongly, impulsively, red. Someone say best sell it. You found some me say okay. Now let me look at the sequence. Say we correct it into the structure. Then we continue the move. Really wow. So if surprise early BBCR are they inside waiting for this confirmation? What is this impulsive move into the market? So when this impulsive move comes, this is the confirmation. Impulsive move, this is the confirmation. Now I can step back into the 4 hour. Step back into the 4 hour like this. Now my this is a sequence. So let's see from the top here. Okay, so 50%, 60%. It is takeable. I can take this position to the downside. 1, 2, 3, 4, 5, 6, 7, 8 candles. It is takeable. Now we take in the camera. Price will drop 1, 2, and now we are having a bigger correction. So now this is the position, the sequence, and now it has led to the entry. This is the entry model. I won't go into the entry model now. So if you follow me, I will say now how I may answer this position. So okay, let me answer this first question. Is it higher probable or low probable? Is it high quality or low quality? And then I'm a person who answer now must step into the market. The first thing I'm saying is price is at my position at area where there is volume. And the first one in the stake, my position at value area. How did price approach the level? We approach the level in a reversal model. Impulse correction. I'm looking for a saber reversal. Tick. In signal price action, confirmation price action. Tick. Now your back sequence now 6 to 8. Tick. There may be a footprint 1, 2 touch continuation to break above any drop it. Tick. Now I'm looking for say either price or for me another correction. Now I continue moving or price the banner have tapping into a so I see. So I'll continue the move. So now my aim is to look for downwards move because the move is happening. My target is from a Surasi to a CRC. As the move is happening, I'm patient, looking for tradable opportunities like this and this to get in the move. So I'm patient. And let me mount tip way. So where this one is positioned at right now, say you correlate here with the dollar index. It means that the dollar index is also positioned at key inflection point, but on daily, I can say it is a value area. As you say, strong, you're rejecting the pushing a price and by the tapping, the drop is strongly, and price has come back into this area and you are rejecting. So if I'm looking to sell on AUD USD, now I just say this one, if this one is to move up, it means it will push AUD USD to the downside for this sell, because the dollar, if the dollar is going up, dollar correlated person, negative correlated is going to go down. So this is this one for my analysis for this week on AUD USD.